Welcome everybody to our Bay Area Housing Q&A. We are really excited today because we have invited a panel of our current home buyers and investors to our webinar. And of course, I also have a guest host today. I'm gonna make some introduction in a little bit. But as some of you know that we created this was about, now it's been what, 10 weeks. It was the second week of shelter in place because we realized there's so much information out there. So that's why we've created this town hall so we can really bridge the gap, information gap between the consumers and the real estate industry. Now today we have co-host Terel Beppu, and want to give a little background is that I met Terel because we're both side partner agent, and one time we actually carpooled together to one of the forums, and that's how we got to know each other, and we just got along so well, and we have the same philosophy. So I'm really excited that I get to invite him to do this webinar together. So Terel, would you like to say, do a little brief intro?
Sure, thank you. I'm Terel Beppu. I'm with Beppu Group Real Estate. My license is with SI, just like Helen's. It's a real honor for me to be a part of this. I appreciate the invitation, Helen. As she mentioned, very early on, we kind of realized we have very similar mentalities when it comes to client service and integrity and things like that. So it's been a lot of fun to get to know Helen and work alongside her, and now to be a part of her webinar is really cool. So thanks for having me.
Yeah, thank you. Thank you for joining us. I know we're going to have a very engaging webinar today. But as always, I always like to start off with some statistics because I know a lot of people like statistics. So as we all see this week, the Dow just kept going up, but then at the same time we kept talking about employment rate is so high, and then the stock market is going up, and there are multiple offers. What is going on? I just pulled this chart like about 45 minutes ago, so it went above 3,000 now. So we thought it would be interesting to take a look at some of the other statistics. One of them, I see a lot of comments these days, chief economists from Freddie Mac, chief economists from First American, or even other companies, they all talk about they think that the market is going to recover second half of 2020. And then they also talk about housing supply still low. So the house prices growth is likely to slow, but it's not likely to go negative. And as we just saw earlier, some of our polls, we didn't see anybody answered the accepted price went below asking. So that's quite interesting. And then this one is even more interesting about this article. It says, we're about to see the best economic data we've seen in the history of this country. And this is by a former economic advisor to the Obama administration. So, I don't mean to go political, but it is something that Democrats all of a sudden was like, oh my God, what's going on? So I thought it was interesting because these economists keep changing the way they say it. At first it says V-shaped recovery, then later they say it's U-shaped, then later they say it's W-shaped recovery, and now everybody's starting to seem to be very optimistic. And then now when people ask us, do you think our home prices are going to crash? So here are a couple of things that I think people need to pay attention to. One is that there are a lot of mortgage forbearance being done right now, and most of this mortgage forbearance is actually by FHA, VA, and also Ginnie Mae borrowers. Now, with that said, in our Bay Area, most of our buyers, they're not FHA, VA, or Ginnie Mae borrowers. So that's why we are seeing what we're seeing right now in our housing market in the Bay Area is that we don't see a lot of people, we don't see a lot of prices going down. Instead, we still have a lot of demands. And another thing is that housing prices will crash like 2008, 2009, only if there are a lot of foreclosures. Now, at the time, 2008, 2009, I started my business in 2005, so I went through that period of time. I remember in the beginning, everybody was like getting a house with no payment down. And then we even had loan that's above 100%, meaning not only you don't need to put down payment, they can give you more money to buy the house. So it became more like a business decision for a lot of people to say, like, I'm just going to let it go. I'm just going to let it foreclose. And banks, they're not in the business to hold these assets. So they had to sell them at a discount, and it's mass selling. Now, fast forward to 2020, during this pandemic, we'll see that in this chart, you'll see that more than 58.7% of the homeowner have more than 60% equity in their home. If you have that much equity, do you think that people are going to give up on their home that easily? I don't think so. So this is the reason why, even though we have a lot of forbearance that's going on, I don't think that homeowners, after this, the homeowners are going to say, I'm just going to give it up. They're going to try to work it out somehow, some way. And then second thing is that in our area, we don't really see as much of this forbearance.
Helen, just a quick tidbit on the forbearance. I'm in the process of refinancing my own house. And I've been working with a lender I've worked with for years named Tony. He's at B of A, and he shared with me that B of A's rates aren't super competitive right now because they have to protect their margins. And the reason for that is they have 12 million loans in forbearance. So there's 12 million people who are not making their mortgage payments right now, which translates to billions of dollars, right? I don't know what the average mortgage payment is in the United States or wherever their loans are spread across, but take $3,000, times 12 million. That's how much they're not getting every month right now. Right? So pretty staggering. I think obviously once shelter in place lifts and people can go back to work and things get normal again, that number will come way down again. And to your point, I don't think we'll see many of those, at least locally here, fall into the, short sale or foreclosure bucket. I think we're pretty insulated from that here.
So, Terel, did you say that you did not see rates being competitive, or did you say you saw rates being competitive?
He was a little bit embarrassed that B of A couldn't be more competitive on their rates relative to other things I'm seeing out there. And he explained it, that's how he explained it. He just said, we're normally really trying to be really competitive on our purchase money, on our refi loans. But with so many loans in forbearance right now, we have to it means we're going to miss out on some loans, but the ones we get will be profitable kind of thing.
I think it may be lender specific, because I was talking to a lender. I was talking to Citibank, and their rates are amazing. 2.68 on a 10-1 ARM, or 2.7, I think it was, and right around 3 for a 30-year. So I'm going to refinance my properties as well. What I do think is happening is that I don't know if you saw, but Jamie Dimon, who's the CEO of JP Morgan, he pretty much said yesterday that the bottom is in. You're going to see a fairly rapid recovery. And he's kind of the guy that everybody listens to on Wall Street. He initially, when this whole COVID thing happened, he's a very conservative minded guy. I don't know if you remember, but in 2009, he was snapping up banks left and right that were going under for pennies on the dollar. And so, when he said that, that's when you saw the market run this week. And even today, if you follow the banking stocks, they're going crazy. So I think that the market is now saying that the bottom is in. Now, that doesn't necessarily mean the economy is going to recover, but the market, which projects a year, 2 years out of where the U.S. economy is going to be, is saying that the bottom is in. And so, I communicate with Helen, and I was like, hey, find me a deal, but there's no deals because everybody is looking for a deal, right? So that's the thing. So if you don't see, deals happening, that means people are not selling, or they're just, there's enough of a market demand to, prices aren't getting pushed lower. And I see this happening in other areas as well. So, Bay Area is unique, but in LA, it's something very similar. Because I was looking in LA, I was like, okay, maybe not in the Bay Area, maybe find some premium property in LA, Santa Monica, San Diego, Newport. Same thing, man. Things are closing very quickly. So I'm kind of upset that, I think you may have gotten a good deal in March, I suspect, if somebody was kind of quick to action, but it's, I think the market's now kind of caught on, unless you see a second wave that's devastating. I think you're going to see a fairly strong rebound in Q3, Q4.
Yeah, I think I really agree with that. If we look at, because everybody was really worried about the unemployment, if you look at this chart from the US Bureau of Labor Statistics, it's showing that unemployment is actually mostly our teenagers, and they are not really the home buyers demographic. So that's probably explain a little bit also why, it's not really affecting that much on the housing market. And then you see that over here is saying that temporarily not having job or applying for employment, they are temporary for 90% of them, and then 10% are permanent. So I think once the economy open up, hopefully a lot of people will be employed afterwards. And then this is the one that you were talking to JP Morgan, and this is from 4 banking institutions. They all, besides Wells Fargo, they expect that the recovery is going to be in fourth quarter, but everyone else thinking that the recovery is going to start second half of the year, which is starting next week. But we have already started seeing the housing market has been improving. By looking at this chart, I just pulled this is up till yesterday, and you see that the new sold versus the canceled and withdrawn. And of course, this is when the shelter in place starts, and you see a bunch of these withdrawn listings out, but then you see that it's starting to tail off. But what's interesting is that once we know that May 4th is the day that we can show all type of properties, no open houses, we can just show like vacant and occupied homes. You see end of April started a huge jump on the new listings, came back onto the market, and it just kept coming up. And then also here, this is one that talking about the listing changing to contingent and pending, meaning people actually making offers. You see that this is kept going up again right after May 4th. It has huge jump on the offers going in and become pending. Now, one of the biggest questions a lot of people ask is that, hey, right now Facebook, Apple, Twitter, they all talk about you can work remotely. So does it mean that a lot of people are leaving San Francisco or the Bay Area to work in another state? It's like not in California. So will that affect the housing market over here? I think this is one of the questions I definitely want to ask you guys. I do have my own opinion. I have heard a lot of our buyers what they're thinking, but I definitely would like to talk about this in a little bit. So with that said, I want to go back to our poll first. Are you guys able to see the poll?
No, we can see the slide that has the quote of the week.
Oh, sure. How about we just go through the quote of the week first?
Okay.
This quote, it says, the only limit to our realization of tomorrow will be our doubts of today. That's kind of what it was happening. A lot of people, let's say in 2008 to 2012, if they didn't buy anything at that time, they're going to come on and say like, oh, why did I buy anything? Because they had doubts at the time. And then same thing in March. We've seen this over and over again, actually, for a lot of home buyers. And I think one of the reasons why some of you on the panels have been very successful in the real estate market is because you didn't really let your doubts hold you back. So I thought this is quite interesting. I'm going to stop sharing for a little bit. I want to introduce our panel. But before I introduce the panel, I'm ending this poll, and I want everybody to see this. So I want to ask that, what do you see on the current Bay Area housing market from your experience? Most people said that they see lots of showings with multiple offers. The next one was like listings stay on the market for over 2 weeks. Actually, there were 35% seeing that this stayed on the market for over 2 weeks. But next one, 24% is less than 2 weeks. And then we don't really see that it says lots of showings but very few offers. There are 24% of people saying buyers make offers from virtual tour, and 35% say they won't make an offer until they see the property in person, which I think makes sense. The second question is that what do you see from the accepted price versus asking price? Most people see that accepted price is right around asking. And the next highest is accepted price is slightly above asking. And then some said very few is like way above asking, kind of like in the beginning of the year before shelter in place. But accepted price is way below asking. We have 2 and 1 is slightly below. So you see the majority is still at or above asking. So thank you so much for sharing your result with us. And now I want to go ahead and introduce our panel and get right into our Q&A. First of all, I want to welcome our panelists, and I want to let everybody know that we are going to use their first name basis. We're not going to share too much information just because we know how real estate agents are. We can be quite aggressive. Just kidding. But I really appreciate that you guys are willing to speak on based on your experience. So let me go ahead and start introducing Winnie. Winnie has been a long-term client of mine, and she had a lot of real estate experience. She had bought a lot of apartment buildings and also single-family residences. She's also a stock investor. So when we talk, we can talk for hours about real estate. So I always enjoy talking to Winnie. So welcome, Winnie. So, and then next is Judy. Judy also, we've done quite a few transactions, and Judy is she invested mostly 1 to 2 units. So a lot of single family condos or duplex. And she has this experience of like adding ADU for single family. So, and then she would rent it out for Airbnb. So welcome, Judy. And of course, Ahmed, I've worked with Ahmed a few times, and he actually does a lot of fix and flips. So he's been on the market for a few years now. And when I first met him, turned out that he and we both graduated from UCLA on the same year. And I was like, oh my gosh. And of course, at the time I never met him, but it was kind of nice to be in the Bay Area, both love real estate, and then both is a UCLA Bruin. So welcome, Ahmed.
Hey, thank you, Helen.
And Terel, I'll let you introduce David.
Yeah, so David was referred to me, and I've had the honor of helping him, navigate the home buying process. But we are in escrow, and I'm really excited. Actually, he's going to close escrow tomorrow. So
wow,
he's in a pretty exciting part of the process right now. So thanks for joining us, David.
Absolutely, my pleasure.
So now, how about I'll go ahead and start the first question. Want to ask, I assume all of you guys do invest in both real estate and stocks. What are your thoughts about investing in real estate versus investing in stocks? How about I'll have Winnie to start first.
Well, I think if you're long-term investors, I actually prefer real estate because of the leverage nature of real estate. And so over time, you will build equity and, receive or collect passive income. So I think you also tend to not make any emotional buy and sell in real estate. So then that prevents you to make few mistakes. So I'm a big proponent for real estate investment.
Great. How about Judy?
So yeah, Helen, you know me, I do a little bit of everything. I like to diversify. So for me, I think it depends on what's going on that year. If I was looking at from an investment perspective, because I mean, if I were looking at for a primary home, that's a whole different story. But if I were looking to invest, then I'm not gonna lie, middle of March, I poured all my money in stocks. So I'm a big contrarian. When the stocks go down, that's when I go in. So in middle of March and early April, most of my money was in stocks, but now I'm looking at real estate again, right? So, I mean, in my opinion, I agree with all of you that Bay Area is an anomaly. To me, there's not a down market here. Typically, there's either a buyer's market or a seller's market. Either you're going to pay a little bit more to compete against other people, or you're going to compete a little bit less. So I think I agree with Winnie that from a long-term perspective, if you want passive income, I think real estate is great, and that's why I put money in real estate. But I think stock is also great because of liquidity. Because if I were to put all of my money in real estate, then I can't have money to do other things when I want to. So that's why a portion of my investment is also in stocks as well. But I think for stocks, I also put money in preferred stocks, for example. Preferred stocks they generate good income as well, and it's taxed at qualified dividend rate versus ordinary income. So that's why I prefer stocks as well. versus common, right? And then for real estate, it's good, but it's also sometimes a lot of work because you got to deal with tenants, you got to deal with maintenance, and the rent is also taxed at ordinary income, right? So I typically like to look at the overall and see what's going on that year.
Mm-hmm. Great. How about David? Oh, David, let me unmute you. Go ahead.
Well, I'll just have to admit that I've actually never really focused on the investment side of real estate. And really my home purchases have all been about a place to live. One in Virginia, one in Chicago, and then this is now my third home in the San Francisco Bay Area. But in each case, I was the owner and occupier. I'm always glad that there's a benefit, and I did talk to my financial advisor about taking some money out of other investments to put into this house. So I'm just trying not to think too much about it, and maybe I'm being naive, but that's broadly how I'm thinking about it. It's a better way to use my money than renting.
Yeah, great. And how about you, Ahmed?
Yes, just a brief intro, Helen.
Yes.
Yeah, so basically I am an investor in real estate. I was raised in the Bay Area since I was like 6 months old, was in Pennsylvania for the first 6 months of my life. And the only thing I've seen in the Bay Area is prices just go up over time. I mean, I think people will leave, but then there'll be new people that are going to come back to start companies. And, once you start a company and you have an exit, you buy real estate. I mean, that's kind of way things happen here. Extremely bullish. I think times like this is when wealth is created. So, I mean, if this is how the real estate market is, given this pandemic, a year or two from now, it's going to be crazy. So I think if, my mindset is to buy, and if I can't get into a premium area, I want to buy something. So I'm willing to bet that in 2 years from now, I'm going to make good money on that. And my mindset is my mindset is to sell expensive things and keep things that I can manage. So if I'm going to flip a house in Palo Alto or something like that, I don't need that. Yeah, I'm not going to live in it, so I'll sell it. But if it's something that's cheaper in San Jose or somewhere else that I guess giving me a good yield, I'm more inclined to hold it because the cheaper stuff goes up in value a lot faster.
At the end of the day, with the stocks and the comparative stocks and real estate, would you say that real estate obviously have more tax benefits compared to stocks?
I think it depends because, obviously for real estate, there's a lot of things that you can deduct, and there's a depreciation you can account for and things like that. So I think I think it's hard to compare, in my opinion. I think it's good from an investment perspective, it's good to have a mix in the portfolio.
Absolutely.
Just because all eggs are not in one basket.
Yeah, at the end of the day, it's all about diversifying your investments, no matter if it's stocks or if it's just real estate. So this is like the caliber of our panelists is like they don't only invest in real estate, but then they also invest in other stuff as well.
I wanted to ask this. So, the pandemic hits, which is going to induce a ton of fear, right, in the marketplace, myself included, right? And each of you, maybe, from slightly different angles, are still in a sort of a buying posture, right? So my question for you guys would be, what sort of mental gymnastics did you do to find yourself comfortable transacting in this environment versus waiting? What was your mindset around that? Because I certainly had a handful of buyers that I was helping when this started, and a couple of them pumped the brakes, understandably, and I'm totally supportive of that. And then I had some that, Ahmed, like you, great Warren Buffett says, be cautious when others are greedy and be greedy when others are cautious. And so this is a time when there's been a lot of caution out there, and some people are like, great, let's buy. This is a great time. Rates are good. So I guess for any of you on the panel, like, how did you make peace with buying in this environment?
Yeah, David, you just went to escrow during this pandemic, like literally in the middle of this pandemic.
Yeah.
What was your thought process?
Well, so again, I was maybe not going into it as strategically minded as perhaps I should have, but I work in Silicon Valley, and I've been doing a 4-hour round trip commute every day for the last 2 years from Oakland. So I was like, I was done with that. And so I put my house on the market before the pandemic hit. The second weekend of showings was during shelter in place, as shelter in place was just about to be imposed. So I sold my house just in the nick of time to be without a house and staying in my sister's guest bedroom. And so I was highly motivated to find a place. But so the question of how I balanced the risk and the fear, it was partly the question of, are prices gonna tank later and I will end up having paid way too much? And as the weeks went by, I started realizing in the Bay Area, I don't think that's gonna happen. They might not go up as fast, but I don't think they're gonna plummet. So that was one aspect of it. Terel was great at being very thoughtful about what our strategy would be. And then just on a very personal level, I think I probably had a light version of the coronavirus earlier on. Not diagnosed, but enough that I am telling myself I'm probably not going to get a worst case of it later. So I wasn't personally feeling at risk about going into a home and visiting it in person.
Yeah, and actually, a lot of people probably think that they have some kind of exposure to coronavirus.
Yeah, I know. Every time I cough, I'm like, maybe it's now. Yeah.
Yeah. And how much of that consideration regarding the interest rate being so low right now? I mean, does any one of you say like, man, the interest rate is so low right now, I better take advantage of this?
I definitely think that. Although I was reading an article on CNBC that was saying that rates could fall down to 2% sometime next year. I think Helen and I were texting about that, but I think that again, I think the lower the rates, I mean, it's gravy for buyers in the Bay Area, right? I mean, we're so tied to the NASDAQ. And so the NASDAQ's recovered. We're pretty much close to all-time highs on the NASDAQ. I mean, my check was when the pandemic hit to see if I can open up lines of credit against my assets. Mm-hmm. And I was able to do that. And I was like, okay, I'm ready to go as soon as I get an opportunity, but I didn't get that much opportunity in real estate. So I started buying stocks. Not as sophisticated as Judy, but I bought call options.
Okay.
I bought call
and you're
options
more
on a bunch of tech
sophisticated than
companies.
me because by no means am I an expert.
No, but I mean, again, I hadn't thought of the preferred share option. I mean, I was just buying, risky call options, but I was like, you know what, I know what my downside is, but my upside is going to be very, very nice if things go in my direction. And, my initial check is to see what the lenders are doing. So if I can open up lines of credit against assets, that means that they're well capitalized. They're okay. They're not fearful like they were in 08 and 09 where they were canceling credit lines. So I was just ready to buy something that was a good opportunity. I mean, there was no good opportunities. I mean, there was nothing cheap in real estate around here.
That's true.
Unfortunately.
I've got, I guess, a follow-on question. Like the stock market has done some nice recovering, right? We're not all the way back, at least on the Dow, maybe the S&P. Mm-hmm. But I have this notion. So in the first quarter, we had a normal January, normal February, right? Shelter in place was in March. We're going to see, when companies released earnings for Q1, there's a lot of bloodshed in the market. In the second quarter, we have, April, May, and June, all of which will have been, asterisked with the pandemic. And I think people have been trading largely on emotion, which is not uncommon. But in this case, like on health news, did we flatten the curve or not? Or is the percentage of people dying increasing or going down? And when there's positive health news, the market tends to respond well. And when there's bad news, it kind of goes down. At some point, the investing public's going to return to like investing fundamentals. Like, did the company make earnings or not? What's the earnings per share? And so I'm a little worried that when Q2 earnings are released in say July, we may see another big retraction in the financial markets. What do you guys think about that? Have you thought much about that?
Yeah, absolutely. My thoughts are that the market's priced in a pretty bad year for stocks. And if you notice the recovery, that's been mostly in tech names that have big balance sheets, right? So you have Apple, Amazon, all these companies that have either a lot of cash on hand or access to cash. So you saw a rotation. The reason why the NASDAQ is almost at all-time highs is that you saw a rotation of people, blue chip like Boeing and all that kind of stuff, flowing into names like, Facebook, Google, companies that aren't going anywhere. But interestingly, the past couple of days, my NASDAQ portfolio hasn't moved, but the Dow has been taking off. So you're now seeing the reverse happening. So meaning people are now, okay, it just seems like people are like, okay, things are now opening up. The reason the market fell so much was because there was uncertainty. How many people are going to die? Are millions of people going to die around the world? Are millions of people going to die in the US? What's the Fed going to do? Is the Fed going to do anything? Like in 08, they were late to the game. Are policymakers gonna react quick enough? I think it's been kind of the way that the world's policymakers and financial decision makers have reacted to this pandemic has been phenomenal. I mean, they have said, listen, we're not gonna let the markets tank. We're gonna do whatever it takes to support them, and we're gonna provide unlimited liquidity if necessary. And so the reason why you're seeing the rates being so low is that it's encouraging buying, right? So people that can buy because the Fed cut to zero almost. But number two, there's so much liquidity that people have to put it somewhere. So where are they going to put it? They're going to put it in US like if I'm in China or if I'm in India or if I'm in the Middle East, where would I put my money? I'd put it in the US, and not just the US, I'd put it in the Bay Area. I'm not going to put it in Nevada, or I'm not going to put it in, I'd put it in Texas maybe, but if I have money, why wouldn't I put money in the Bay Area?
That's a really good point.
It's going to grow over time.
We have a few clients from Asia actually contacted us and then saying they want to buy real estate here, even though they know for the fact that we are still in shelter in place, but they still want to invest here in the Bay Area. It says something. I kind of want to move on to asking you guys questions about how you guys work with your real estate agents, your experience. What is the most important thing you think your real estate agent should provide you? Winnie, would you like to get that first?
Sure. I think experience and how much homework that agent has done to that property or that market is very important to me. And that, and loyalty is important. And also I certainly appreciate if the agent is willing to step in and solve any dispute or issues during or even after closing. Again, I always said, in an easy transaction, you don't really value how your agent as much, because then that's why a lot of people will say, just do the online listing or whatnot without your agent is fine. I think if on a very basic, easy transaction, you can do that. But I actually have seen so many very difficult transactions that I think that's when the agent matters, and that's during difficult transactions. So certainly that's important to me.
And honestly, you won't know that the transaction is easy until it's closed. So you never know before you go into.
Right, or during the closing, process, then you will find out a lot of issues, right? From inspection, from permits, from your seller, from, all kinds of, issues will come out. And I think whether this transaction was easy or not, also depends on your experience. If you have never seen any difficult transaction before, you may never know how difficult a transaction can be. But I think, after a period of time, I have seen quite a bit. And so I actually very much appreciate an agent who can help me to solve the problems, or at least point me to the right direction to solve the problems.
Yeah, and you have worked with so many agents because you invest all over, not just within US, you invest all over, literally internationally as well. So you definitely have that experience, like why it's so important to have a good real estate.
Yeah, and different type of transaction too, residential versus commercial and whatnot. So But I have to say, if most of the time, like if it's a single family home, maybe the transaction is not as difficult, but still things can go wrong. And I've seen so many things that have gone wrong. So that's why my, like, who I pick as an agent is important to me.
Mhm. Great. Anyone else would like to comment on that as well? How do you choose your agent, and what is most important to you when you're choosing an agent?
Well, I'll comment that I didn't realize I had become this kind of consumer, but I kind of feel like I'm spending a lot of money on this transaction, and I don't feel like I need to do all the work running down all the little details. And so that sense of calm and ease, that there's a full service, there's someone supporting me who's knowledgeable, and that there's no surprises. And that's a little bit because my work in user experience is about optimizing and taking obstacles out of the way of the customer. And so it bothers me as a professional as well as an individual when it's like, why did you not solve that problem for me? But I'll also add that in this time when everyone is stressed, I'm trying to do my job from home, and it's not easy. And so to have things popping up throughout the course of the day, like, hey, this form needs to happen, and this needs to happen, and this needs to happen right now. I've been much more frustrated with my mortgage broker because of like, give me some advance notice. I am not full-time on this. You are working for me and I'm paying you a ton of money. So how is this now my emergency when I'm trying to juggle 3 calls with people in London and Asia? So, so Terel's been fantastic. And I feel like I don't have to worry about stuff, and he's very calm. And like, I would pay for that. And
Yeah.
I am very satisfied with how it's gone through.
Yeah, that's very generous of you. Thanks.
Sure.
And I have no doubt, I know Terel on a personal level, and I know whoever is working with Terel will be super happy because he's so diligent and so calm, like you said. And it's really important for an agent to be able to negotiate on behalf of you instead of bringing you the problem. Like, hey, we have this problem. It's like, bring to the client after you solve it somehow. If you cannot solve it, then bring it to the clients. Yeah. And how about you, Judy or Ahmed? Do you guys have any specific requirements?
For me, it's not really specific requirements, but I think it's setting the correct expectations and also making sure that the agent is really your partner and not just doing a transaction for you. So really looking for a partner that's on the same page as you, and make sure that you are fighting on the same side, because you don't want the agent to just think, okay, I'm just pushing another transaction, just trying to make a commission. Because sometimes, like, I've been in the Bay Area for more than, I don't know now, 20 plus years. So I know this area better now than I did before. But when I first moved here, when I did not know the area so well, I want someone who can truthfully tell me what's going on in the area, right? And somebody who is a local expert, knowing what may be happening within a certain within the city. Because sometimes, like, okay, I buy a house today, it looks nice, may have a nice scenery and so quiet, but next day there's going to be like a hotel next to me, like a huge plaza building next to me. So it would be great to have somebody that knows what's going to happen 3 to 5 years from then, so that you're getting what you're expecting to get.
Mm-hmm. Yeah.
This is kind of a follow-on question, a related question. So Wall Street and technology have been, trying to blow up the real estate model for a long time, and they're of late making some traction. So there are some options out there, some models where, buyers and sellers can save some money. And yet, like, let's take Redfin, for example. They're an obvious, one of these players. In spite of the fact that most people know there's a rebate available as a buyer, they have less than 3% market share, right? Which is interesting to me as a real estate professional. Somebody like Redfin can feel intimidating, but it also tells me that a lot of folks are, in spite of their knowledge that they can go that route, are choosing not to, and are still going to, a full service agent based maybe on a relationship or prior transaction. In your guys' experience, I guess very candidly, like, why have you not sought out a low cost option to, transacting in real estate?
Great question. Great
Well,
question.
I think it's cost and benefit, right? You try to save that, couple percentage, but you may lose up on your, pricing, and maybe your agent can get you an extra 10, 20%, whatever percent it is, you know, when you're price it yourself, you may price it wrong, and then, you know, you save a couple percentage, but you lose out big on other negotiation. I think that's one. And then also, again, it depends on the product that you have, right? And a lot of, you know, the real estate or the property itself may have, you know, other you know, potentials that the buyer may not see, or you don't know how to price in. And I think that's when the agent comes in to, you know, kind of help to I put a value on, you know, these type of potentials. So I think that's important for me. I would never cut my agent out unless I have no option.
Well, I'll admit that I did have a few initial conversations with Fly Homes early on in my buying process. And my immediate sense was really interesting, like, business that they've put together. I'm not sure if they're actually actively working right now. But because it's so dependent on AI models, we've had this massive shock that's blowing up all of the patterns that any AI system would have recognized. And so I frankly didn't trust that the technology-based approach was going to be a good substitute for, like, boots on the ground knowledge of neighborhoods and local markets.
Great point.
Yeah.
Great point. And Amit and Judy, you guys have any comments about that?
To me, Redfin or Fly Homes or Zillow, any of those, I think they are good avenues to take a look. But in terms of hiring agents or actually going through a transaction, to me, it's just seeing another agency, another broker, right? It's not, they can be considered, but they're not, I wouldn't consider it because it's cheaper, right? To Winnie's point that, you know, it's sometimes like, it's not just about the personal, you know, relationship. It also, right? It's also like, okay, there's so many brokerages out there. Probably some people even might want to do cheaper than however Redfin or Zillow is charging, because they are trying to win the business. So price is really not the point. Yeah.
Yeah. And then I always say that, because we in the business, we see so many of these we have so many of these experiences dealing with different type of agents, and sometimes it's just kind of like, well, you could have saved like $50,000, you know, instead of saving that 10,000, you now spent $40,000 more. Yeah, we see that all the time, but I agree, it's like a lot of times consumers just don't see that side.
Right.
And also another thing is sometimes you think you're saving 1%, but if you use the right agent or someone who really knows their stuff, you could be making 10 times more than how much Redfin could have sold for you. Right? You know, if you hire a local expert who has the right contacts, the right network, they can bring you more offers than Redfin can. Then with the multiple offers and the buyers that can bid up for your property, you could be making way more than saving that 1%.
Yeah, great.
It comes as no surprise that, you know, Redfin agents generally don't have as lucrative careers as traditional realtors do. And so, like, for example, they could never recruit Helen to come work for them because she'd be taking a big pay cut. So which agents are willing to go work for them? And it's generally the ones who, you know, weren't producing or are willing to trade maybe earning potential for a steady deal flow, right? Which is something Redfin can sort of promise them, right? So I don't mean to denigrate competition, but you know, in general, they're there for a reason. And so your whole, you know, Winnie, your comment about you sort of get what you pay for, you know, probably applies there.
Yeah, I have a question for you guys, is that real estate industry had been having some bad reputation, because obviously in any industry there are bad and good professionals in there. What did you think of the real estate industry in general, and what can real estate industry, like us real estate agents, can do to really elevate the standard, elevate our image to the public, so that we, you know, we have a better image out there?
Right. When's the last time you saw a realtor portrayed positively in Hollywood? Right. It just doesn't happen, rightfully so.
Well, I think, you know, like Helen doing what she's doing right now would, you know, build reputation. And, you know, certainly she is trying to educate investors instead of selling a product. And I think, you know, we appreciate that. And, but certainly we do see a lot of like a huge variation of quality of agents. And, you know, so you just have to pick the right one to work with. And but then I think education is one, and even the education you know of the agent itself is also important too, right? I mean, I've seen a lot of agents who know nothing, and I really cannot stand when an agent don't have any opinion about property. That's what I hate the most. Like, yeah, so I think um, and be able to share the knowledge is important. I have seen agents who would not want to share anything because it's proprietary, or they're afraid of, you know, their competitors stealing their, you know, contacts or whatnot. But then I have also seen agents who are very open to share their contacts, whether it's for handyman to contractors to lawyers and whatnot. And I think you know, the better agents in general are not afraid of competition and willing to share. And I think from those sharing of information, the investors learn a lot. And I think it kind of built to your, you know, to your name and credibility.
Great. Great. Well, I want to maybe go into the Q&A. Just maybe real quick, somebody asked that, do you think stocks has high risk or real estate has high risk? Who thinks stocks has high risk? I'm raising my hand. Okay, everybody thinks stock is high risk. Okay, and then to the panelists, given the various forms of real estate investment forms, multi-units, offices, single-family, duplex, flipping, etc., can you share with us why you particularly invest with one type of real estate form over the another? Who would you like? Ahmed, I know you do a lot of fix and flips. Would you like to talk about that? Do you prefer one way over the other?
In terms of what? In terms of like portfolio or investment strategy, or what do you?
Yeah, like if you're going to invest $1 million and invest, you know, in rental property, how do you decide between a fourplex, another single family home, for example, a duplex, or, you know, small retail? How do you make that decision, I guess, across the different genres of investment property?
So for me, I think I look at, you know, what's the best long-term value if I'm going to hold a property. What's the best long-term potential of this property, right? So rents, I think, are going to continue to go up over time. So I think multi-unit is an obvious investment if you're in a prime area. Flips I do if I find just a really good deal in an area that's super hot, right? Like Palo Alto or Menlo, or like those types of areas where, you know, I don't think a recession, even if it came, it wouldn't really impact those areas as much. So I'm like, okay, if I can make, you know, 15, 20% within a year or two, you know, just kind of moving money around, I think that would be, that's my strategy when it comes to flips. But I think my, you know, way I look at it is like, okay, worst case scenario, if I have to hold on to this property, how do I maximize the return? And I think the more revenue streams you can get out of a property, the better. So if it's multi-unit, I think that's the best way to do it. If it's a house, maybe add an ADU like Judy is very good at doing. You know, I've been looking at that with some of my properties as well. I've got an ADU on one of them, and I'm looking at applying for an ADU for another one. And you know, it's kind of crazy how much people are willing to pay for such a small amount of space if you're in a good location.
That's true. And Judy, yeah, what about you?
So for me, first is how much I can afford. Okay, so it has to do with affordability. I think, you know, with real estate, it's a very capital intensive type of investment, right? It's not like stocks. Maybe I can find something for $2, $3. Real estate is like, you're talking about, especially in this area, 20%, 30% down on at least $1 million, right? So for me is how much I can afford. Let's say when I first graduated from college, I started first buying in Texas, right? 100,000 homes, whatever I can afford. And then I 1031 exchange to California after I gained some after they appreciated. So for me, it just depends on whatever I can afford. So then it just depends on, based on the calculations, what's the cap rate, how much am I making from this unit. Let's just say that's how it was in the beginning. Whatever it is, single family, condo, things like that, whatever I can afford. And then after I started having more down payments available from 1031 exchanges, then I started looking at a little bit more multi-families and also duplexes. Or if I can't, then I want to go for a single family so I can build an ADU. Because once you have the land and it's possible to expand, then you think about how to best and most utilize that piece of land to generate more cash flow, right? So for me, it's how much I want to put in, and then if it's expandable over time, that would be what I've been looking for. But so then it would all come down to location then, right? Sure, like this piece of land here might was tiny single family house right now might be really expensive, but if you think about what you can do with it to make from a 2-1 or 2-2 to a 3-2 to a 4-2 and then build an ADU, then over the long run, you could be doing pretty well, especially once you have already purchased this piece of land or the old property on top. The property tax you have to pay at least will not be nearly as high as buying a brand new large place, for example.
Yeah.
So,
and Judy, I have to say, like, it's really fun working with you, because she's like this. She's like, I see it, it's good, I want it, and done. You know, I know exactly what kind of exit strategies I'm gonna have, and you pretty much fix up every single property that you bought, and then you increase value, and then you do it again. And that's just like, she is very decisive and just keep going. It's really fun working with you. And Winnie, you do a lot more multifamily, and you actually have some commercial as well. So how do you decide what to invest in?
Well, I think it depends on the risk appetite of the investor, and also, like Judy said, how much equity or how much cash you have, right? I mean, Bay Area, everything is very expensive, so if you want to buy multifamily units in Bay Area, you cannot get it in Palo Alto, then you might have to look further. Then that's how kind of sometimes limit your location options, right? But then on the other hand, I think another limitation is lending, right? So if you invest in single family homes, most of the times now the lenders have a limitation of lending not more than 5 to 10 loans. And so if you keep building up your portfolio when you're approaching the 10 loans for your single family homes, then you kind of go out of luck, right? You kind of have to expand and go into multifamily or commercials. Otherwise, your lending capacity is capped. And I personally don't like to have so much on my personal credit history. So that kind of pushed me into doing commercials more. And then of course, commercials, it depends on a lot of your tenants, right? And so right now I think office space is pretty risky. But then, historically, at least in the last, 10 years, at least for me, the servicing industries have been good. So my tenants, for restaurants or whatnot have been doing pretty well. But of course now they got hit. But surprisingly, they are all faring better than I thought. And so I actually don't have too much of an issues with my commercial tenants. But then it all depends on your risk appetite, right? I mean, some, like for a commercial unit, you can be vacant for a long time, and the tenant improvement is very expensive. The permits are very expensive, but yet if you manage to get a good lease and you get a triple net, then your return may be much better or much easier also to manage than residential, right? Residential, your tenant may call you all day long on plumbing, kitchen, this and that, not working. But on a commercial tenant, you don't have that kind of issues, right? And so it really depends on your risk appetite, I think. But then but if you're looking for, certainly at flipping, we have flipped some before. I think that will be successful, but then it's a very not only capital intensive, but you have to really have a good partner with your contractors to work with. And if run into contractors who are not as good or not as timely, then I find that like any time lag or delay or whatnot can be very costly. And then multi-unit, I always find it very safe. If you cannot rent the space out, you lower the rent by $100, it get rent out tomorrow. If it doesn't get rent out tomorrow, you lower it by another $100, then you get it rented out. So so the risk, relatively speaking, is less, but then you need to deal with your tenants issues. So I usually engage a good property manager to handle all that. And I have also seen investors who don't want to engage property manager because they want to save that, again, 8% or 10% of commission. But I have to say, a good one is just a blessing. So you just have to use one.
Yeah, at the end of the day, you have to have a really good team. You cannot just say, okay, I'm going to do all of this by yourself, because we all have our own profession. You need to hire somebody who's good at what they're doing. Otherwise, you're going to make very, very costly mistake.
Correct.
I think there are so many more questions that I want to ask. I don't know about you, Terel, but I wish I could go on for another half hour, but at the same time, I want to respect everybody's time. In the meantime, I'm going to share just our last screen. I want to thank everybody for being on our, on our panel today. David, Judy, Ahmed, and Winnie. Without your, I think you are actually helping a lot of consumers too. We have a lot of clients jumped on the call to understand what do we do. Actually, one question, if you guys don't mind me asking, do you guys, we talked about this earlier on, a lot of these large companies saying they want to have employees working remotely. Do you think that that's going to cause a lot of people moving out completely out of the Bay Area and then to another state?
I don't think so. Facebook already said, Mark Zuckerberg already said, if you're moving out of state, your salary is going to have to reflect it.
Yeah. David, how about you? What do you think?
I've thought a lot about that, and I actually spent a couple weeks wondering, should I try to pull out of this transaction? Sorry, Terel, but that was actually going through my head. A lot of my colleagues at work were basically saying, should I just move to Tahoe for a year? And like the pros and cons of 2 moves, but saving the money. But in the long term, I firmly believe the face-to-face matters. I don't think you can endlessly work remotely and not build those relationships. And no one knows how we're going to do it, but eventually I think it has to come back at least partially. So I can't not be near a hub of people who do the same work that I do.
Absolutely agree. Great. Now, before we leave, I want to give everyone a parting message here. If you cannot do great things, do small things in a great way, by Napoleon Hill. Honestly, I don't think you have to be this investors that do multi-million dollar deals all the time. But if you can just start to build your investment portfolio a little bit at a time, and you do great in each one of them, you will be set. Your retirement will look so different just by adding one rental property on your portfolio. So I just want to leave this message for everybody. And then lastly is that next one on June 10th, we are going to talk about planning, construction, and ADU. We do have an ADU specialist who's confirmed that he will be speaking on June 10th. So I hope you guys can come back. And again, thank you so much, Winnie, Judy, David, and Ahmed, and also Terel for co-hosting this with me. It's been really fun.
Happy to do it.
Thank you.
Stay safe, everybody.
See you. Bye-bye.
Thanks, David. David, I'll see you in a little bit.
All right. You got it.
All right. Take care, guys.
Bye.